The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rocking tune means that it is time, yet again, for the Option Block, your bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, toss in a little bit of analysis, a little bit of education, some listener mail, and a few other fun segments, perhaps an interview or two, and there you have it, the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as the ever-expanding Options Insider Radio Network. And as I've mentioned on the show before, if you like this show, particularly the Trading Block segment where we talk about some of the new and current events going on in the realm of options, then check out our Options News Rundown program. It's available every day. You can find it on theoptionsinsider.com, iTunes, Stitcher, anywhere else you find your favorite programs of choice. It's a quick 5-minute rundown of the top headlines, the top stories from the world of options. I think if you like this show, you're going to love that one. So check it out, Options News Rundown. And I am joined on the old Option Block All-Star panel today by a recurring cast of regulars, starting off with the man beaming in the farthest, all the way from the great state of Maine. He has taken a break from eating his sumptuous and delicious lobster feast to join us here on the show today. Of course, I am talking about none other than the Rock Lobster, Mr. Andrew Giovinazzi from Option Pit. Andrew, welcome back to the show, sir.
Thank you. I could never even write an intro like that. Your intros are so good, I don't even know. I don't even know what to say afterward.
I leave you speechless, which I guess is the point of a good intro. Or perhaps that's a very bad intro because I've left it, you cannot respond in whatsoever.
It is almost time for delicious lobster season again here in Maine. Spring is coming, and I can almost get the snow off my deck so I can start to eat lobsters outside again.
And I've been doing this for a while. Sometimes I tend to favor a grandiose intro, if perhaps for no one else's benefit than my own. But it is quite fun to test myself and see what I can throw out there.
It's pretty. They're fantastic. That's all I gotta say.
Now I'll tone it down a little bit for the man from the mountains because he's more of a plain spoken type of guy. You know, he comes.
Yes, just give him a 2-word intro. Exactly. Let's see how he handles it.
I'm already laughing. Of course, we're talking about none other than the man himself, good old Uncle Mike Tosaw from Know Your Options Inc. He's taking a break from some snowmobiling, perhaps a little squirrel hunting, to sit down with us today on the program and discuss some options. Uncle Mike, how are you doing this fine Thursday afternoon?
Pretty good. I was trying to figure out, I couldn't quite click my mouse quick enough. I was going to try and get some type of a song to introduce myself to upstage the intro to Andrew, but I couldn't quite click fast enough. So Andrew, you win the introduction contest for today, I think.
And last but certainly not least, joining us from the land of Options Express and, of course, wearing his jaunty cap is none other than the Viceroy himself, good old Alex Jacobson, fresh off his other appearance on our network earlier today where he dove deep into the world of credit spreads. Alex, I'm glad you still have a little bit of voice left. You've saved it here for our Option Block listeners.
Save the best for this show, always. Good to be here today, Mark.
Yeah, it's going to be a fun one. I'm looking forward to it. So I think without any further ado and any more prolonged introductions, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the old trading block. This is, of course, the portion of the program where we break down the day's action. And it was an interesting one. The markets were mostly in towards the red for most of the day. It was interesting because it seemed like during the middle of the session, we might start to catch a little bit and get a little bit of wind back in the old sails and perhaps pull that old magic trick we've seen so many times now where we start the day to the downside and then we finish to the upside or unched. But didn't work out that way. We actually, the wind got sucked out of the sails further as the day progressed, and most of the major indices closed sharply down on the day. We have S&P down nearly a full percent, or about 13 handles, to 1545. The NASDAQ down a full percent, or about 32 handles, to 3222. And the good old Dow, actually the laggard today, only down about 0.6% to 14,421. Of course, not surprisingly, we saw a little bit of juice creeping back into the old markets today on this pronounced sell-off, with the VIX up about 1.3 handles on the day to 13.98. We've been vacillating all over in that VIX cash land, and maybe perhaps we'll start there as we are wont to do on this program. Seen a little bit of juice coming back into the old market today, huh, Mr. Andrew?
I did. We actually are looking right at it looked like it was going to peter out, and then everybody started to freak out again about, what's going to happen with all the poor mobsters' money in Cypress. So I think it's sort of back to the, okay, that generates volatility. Then we had some, I think, okay economic news, and market doesn't really seem to care. So it's so funny. I don't think it's possible for the market to go up when there's anything. The Euro ministers anywhere have to decide anything anymore. I don't know when that is going to stop. I used to remember a long time ago when nobody would care about Cypress, but it still affects the market, and it still drives, like Treasury bonds up. So, but that's enough to drive. I mean, the thing is these Euro issues used to drive the VIX up by, what was it, just even earlier in the week, we had, I don't know, like 15, I'm going to say like a 15 VIX, give or take. We had, it shot up from such a low level. And I mean, it just kind of was climbing into the after hours, not the VIX per se, but the last 15 minutes of the day as all that stuff gets marked. But it didn't get up to the higher level. So it's kind of one of these things where the next high is not as high as the old high. So it doesn't make me think it's very sustainable, but who knows? But again, we'll wait till what? They're going to announce some line in the sand on Monday, and they were supposed to have a press release today, and who the heck knows? Tomorrow we'll wake up and all of a sudden then the market will be up, 10 handles or something.
Tomorrow we'll see Luxembourg come out with their news, and then the market will really, really light on fire.
Exactly. Luxembourg is just going to take over Cyprus.
Whither Luxembourg, so goes the S&P. That's what I've always said. And
I think so.
I think that really holds true today.
And I think this is more of watch the Treasury if you want to watch the Treasuries, if you want to see I think right now, as long as the TLT is going up, at least the market's going down when we have these kind of issues. If the TLT starts to back off, I think that's we're kind of back into the flight to quality thing. Gold was up a little. The TLT was up a little bit. It's just not as much of a trade as it seems to have been over the last year. It's still a little bit of a trade. It's just not much of one.
Now, you mentioned earlier the economic news, and we did have a little bit of good news on the radar. I suppose it's a qualified good news, really. It's not fantastic. I mean, jobless claims did tick up, but to 336,000 when they adjusted it, but not as much as they expected. So I guess that's a good thing. They're expecting 340,000. I'm not sure if 4,000 jobs here or there really is the bellwether the market needs to really turn around and start rallying again. But apparently that wasn't enough. That kind of delayed it. I think that's what really caused some of the midday pause we saw here as the market seemed to take a collective breath, and then it just kind of decided to keep heading down south. Cypress outweighed the jobs numbers today, apparently.
So I was just saying, yeah, that's. I mean, I think so. I think it's kind of it. Just, everybody needs an excuse to sell because, we're getting close to all-time highs, and nobody likes the market making new highs because they're making new highs. It freaks everybody out. They don't know what to do.
Uncle Mike, what caught your eye in today's sea of red, sir?
Well, I want to expand upon Andrew's comment about the market making new all-time highs. I have taken some action along those lines, and I'm going to talk about this a little bit more in the strategy block, which today is going to be a nice, good rant block today. But with that, some things that are catching my eye. IEF, I see that one's up a little bit for the 7 to 10 year treasuries. TLT went up a little bit. So for the most part, I think today was just a down day. It doesn't necessarily, I mean, I know we have the news out of Cypress, but I don't really see this as something huge and earth-shattering of being a scary down day by any means. We didn't even lose 1% for crying out loud. I can remember back in the day when if you didn't lose 5%, it didn't really seem like a down day at all. So today, not a whole lot in the broader scope. A couple of other specifics. GLD is up on the day. So is silver and the metals with a flight to quality. And just curious to see if this VIX will pop back into the higher teens.
I don't know about you guys, but my favorite story from the markets for the past couple of days is, of course, touches on an odd block special as well. We've discussed this company a number of times in the old odd block, of course. I'm talking about Lululemon. They make those fantastic high-end yoga pants for all the ladies out there. I think they've hit a bit of a stumbling block of late. They made apparently see-through pants. And that's coming back to hit them. It's going to take off. It's going to really hit their guidance, and it's not exact. It's pretty much as big of a debacle as you can probably have for a yoga pants company. And so all the ladies out there who are buying their high-end yoga pants now, perhaps their derrieres will be exposed to the world. So I can't imagine that being a beneficial thing. Of course, they closed up on the day today, up about 1%. Maybe some people thinking this news is overblown, but they have announced that this is really going to impact their earnings, and it's just a fantastic story, which means it's great for the odd block.
Yeah, no such thing as bad publicity.
Oh, okay.
I thought they should just
when it comes to yoga
them
pants.
as yoga pants at home wear. Right, so they just walk around the house in the see-through yoga pants. All the ladies who buy the yoga pants, and there you go. You got see-through, and then I think that would be bullish for Lululemon. They should just ship them. Yeah, line.
They should just ship them to Victoria's Secret, and then there you go.
There you go.
It's a Kardashian.
Don't burn them. Don't throw them away.
They also announced they're going into golf wear, which is part of what was on the tape today that I think may have helped the stock too. That they're going to expand into golf attire, which is an interesting diversification of their business.
Their CEO is probably saying, heck, quick, what do we have that we can distract people from about these invisible pants? Quick, golf, throw it out there. That'll work. So now they can make hideous golf clothes along with everybody else, apparently. Hopefully, as long as they're not see-through, I think we'll be all set.
Well, you could just put like a skirt over the leggings, and there you go. You've got a golf. You have golf attire, golf or tennis.
Andrew, you seem to have a little too much knowledge about ladies' wear. This is distressing.
Well, I do look at them. I do look at what women wear, and I like, well, they need a skirt. They need a skirt over those see-through leggings.
And Andrew likes his downward-facing dog and a few other yoga positions. He's quite the yoga man. Yoga's big up there in the hinterlands of Maine.
It is. Because people have a lot of spare time, they're kind of kicking around, don't quite know what to do with themselves. So, yeah, yoga's big up here.
Alex, before we close out the old trading block, what caught your eye in today's activity?
Fannie Mae. Ironically, the option that won't expire. Fannie Mae, big spike today in price. A stock that just hasn't had a ton of interest lately that is sitting in a lot of people's portfolios. I mean, I went over to Grigas today and said, what color have you got? He goes, look at this. So, and I don't know if this relates to the interest rate news or the LIBOR news or some of these mortgage portfolios bouncing around, but it was a busy day up here in Fannie Mae. It's only a little less than $1 stock, and it does, 100 million shares a day. But today there was some real volatility in it, and I suspect it's a living dead name in a lot of investors' portfolios. The other thing was nat gas bouncing off $4 today, and for a while it was in the trading range. There was a ton of premium selling. Clearly some of those call sellers are getting squeezed here today. But to Mark's point and to Mike's point, today was, I think, the ugliest close. I mean, not the worst close in terms of point value, but, we all do that thing at 2 o'clock where the market, the Dow's down 60, and you say to yourself, I'm, going to go on to something else now, look at the market for a little bit, and you expect to come back and it's down, 20, because that's just been what it's doing lately. And today we closed on the lows, and I think it's been a good while since we've had a close on the lows. So today's kind of an interesting setup for tomorrow. We'll see.
And speaking of seeing, I think it's time to close out the old trading block and to put on our fedoras. I'll pass them out here for all of our panelists because it's time for, once again, the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we dive deep into the world of unusual options activity. And I think today we hit on it a little bit at the top of the show, but there has been so much going on out there of late, it's worth diving into a little bit more. That is, of course, all of the interesting activity we've been seeing out there in the land of VIX options. Mr. Andrew, let's say we start there. What of all the activity going on out in VIX today really caught your eye?
Actually, the earliest was a trade just in the morning, a fast and early trade. When VIX was trading around 13, which I believe is lower than when, let's see, where did it close? I think we're up we're about $1.32 today. So this morning, a little tiny trade went up. Somebody bought the 1822 call spread for 35 cents in the VIX. A mere 19,000 times. I didn't think that was too bad of a trade. I think by the end of the day here today, let's take a look-see. Where was that trade trading? Let me guess. I'll bet you it was higher. 80, 22. The trade was up about, I don't know, I'm going to say a nickel. It offered 45 cents, so it's probably close to 40 cents. So the guy made a nickel so far on the one handle move up.
This could be one of our friends who got burned a couple weeks back on that VIX squeeze and decided never again. Never. He's got some heavy shorts and he's coming in just to pick up some upside, just on the off chance that should happen again. But yeah, given what we've seen in the VIX of late, how it has been a little bit thin, a little bit erratic, it has its tendency to pop. Then that is indeed not as perhaps outlandish of a trade as it might seem when you first glance at it. This is April, of course, so this is front month. So it is a very near-term trade. He's got about a month or so for this trade to pay off. And normally we would say, that's not exactly a good do, as I like to say on the floor. But this one a little more intriguing. It's already working all right. He can already get out of it for about scratch or a little bit of a profit. So not bad.
Not too bad. I think the VVIX came in a little here. The volatility of the VIX came in a little at the end of the day, even though the actual index kind of closed near the highs of the day. Like everybody said, everything closed kind of stinky. Well, or just, down at the bottom today at the end of the day. So if you like buying stuff, it was a good day to buy stuff.
Speaking of buying stuff, perhaps let's roll on then into everyone's other favorite. The former darling of the high freak guys since has come off quite a bit. Of course, I'm talking about Citi. Ticker symbol C. This, of course, when it was trading $4, would just light up the tape every day with the most nonsense wash sale activity you've ever seen in your life. On a side note,
100,000 contracts trade, no matter what.
Exactly.
Let's just pick a price. Let's just trade them.
Doesn't matter. In fact, on a side note, it's good to see. I know the CFTC is finally looking into that sort of stuff and saying, "Wow, there's a lot of wash trades going up." They're a little late to the party, but at least they're starting to realize that is indeed a common.
Years late.
Yeah, a few, but at least and it's the SEC, not the SEC, the CFTC, so they're not even really on the right side of the fence. But at the very least, they're starting to get their game together. Where we saw a little bit more activity out in good old Citigroup today, doing about 122,000 contracts a day today, and there was we talked about buying before. There was some put buying going on out in Citi today.
There was. I mean, all the banks opened up actually pretty good this morning, and actually, you know, like a little up on the day. So the banks actually were up on the day for a while, and then everybody freaked out. And this guy made a nice little purchase, the March 28 weekly. I didn't see if he closed already. The weekly 45.5 puts for 34 cents. So those would be expiring the last week of the cycle. They closed right around 42 cents. Not too bad. You know, if you like making money like that. That was oh my gosh, I didn't even have the volume on this trade when I put it up, but it was pretty big. It was like 10 or 11,000 contracts. It was a pretty huge trade. So the guy's basically already up. He's already up 8 cents if he hit the bid. Probably could sell him. Probably sell him out. So I don't know. I thought that was. Oh wow! Wait a minute. You know what I need to do? I need to look at the right strike.
I was going to say. I think you might have 1 month out or 1 week farther out going on up here.
No. I've got it right. It's the 45.5 puts. They actually closed 83 cents.
Yeah, 83 cents. Those are.
So
this guy did pretty well.
Yeah, he's made 50 cents. And I got to look at the volume again. I thought it was right around 10,000 contracts. I didn't put the volume in when I posted this, but it was pretty huge. There wasn't much open interest in it. It was just a straight out buy. And now I have to go. Of course, I have to go look. It's so embarrassing. But it was huge volume, and it was super timely. Like the guy caught the low tick in the puts.
Yeah, it was pretty good. I mean, these are 45 half puts. They have about a week, literally exactly a week to go, and they're trading 83 cents right now. So not a bad deal. Of course, Citigroup closing down about 2% on the day to 45.25. So that helped him as well. His puts are now in the money. So
they hated all the banks at the end of the day. I mean, it was a pretty solid sell-off. I was trying to figure out what the bank news was in general, but obviously this guy or girl, whoever, knew what the deal was. So
speaking of banks, we need to get Mr. Grigas back on it because he was going on for so long when he was on the show about Bank of America and how he loved it. He was holding it at 8 and he was taking so much heat on it, taking so much. Finally, Bank of America up almost 50% since then, so he's probably feeling pretty good. We need to get him back on to gloat a little bit, unless he dumped it at 9, which he probably did.
He dumped it at 8.25. He's like,
scratch. I'm done.
May I explain that new Maserati he just ordered?
There we go.
I'm not really sure, but we'll have to see. I'll ask him.
That's serious. When you order a Maserati, you're making some money.
That's just the OX cash he's throwing around. You know, they get the big bucks over there, not for nothing over there. All right. And next up in the odd block, we have another name I believe we've talked about in the past. Good old Constellation Brands Inc. Ticker symbol STZ. This one closed today down about 1.5% to 46.25 roughly on some actually impressive options volume today. They've been doing around 40,000 contracts a day of late. They did over 100,000 today, so there was a lot of love, a lot of volume going up in STZ. It looks like a lot of that was in the OC 32 half puts. Mr. Andrew, as well as a spread out in April. So a lot of multi-month love here in STZ.
Yeah, it was. It was a lot of. This was kind of it was basically a paper that looked like going both in different directions. The call spread looked bullish, where the paper looks like it was trading more on the buy side, buying the 7.5 calls for the April 47.5 50, and that wasn't a small trade. That was 16,000 contracts. They got all this stuff going on with the FTC approving their, I don't know, I guess some cash flow stream from that's not Corona, or it's the company that makes Negro Modelo, I think. Whatever that beer company is on the, they have some, whatever that buyout deal is going on. I can't remember. InBev is buying somebody.
Yeah, InBev, yeah.
InBev. The other side is, which I thought is buying the OC 32.5 puts for $1.10, that looked like kind of protective paper to me. As in somebody's like, well, this stock did fall apart once before. Maybe I want a little protection. The thing is, if you're long the stock now, STZ probably only goes down to 32.5. So I don't know how much good those puts are going to do them if they actually have a long stock position. Maybe they need it for risk, but a pretty speculative call buy. And there was literally almost no open interest on the calls. So I found that odd. So that's at least the way that volume looked like. There was 51 contracts in open interest.
Yeah, there's a lot of weird paper going on out here today. Just parsing through some, looks like a strangle went up 5,500 times too. The May 35, June 55 strangle they've sold it 5,500 times. It looks like looks like around 80 some odd cents. Looks like they sold 5,500 the June 55 calls, which again, total zero open interest up there, and then it blasted out a bunch of the May 35 puts too. So yeah, a lot of weird paper. People selling strangles, people rolling calls, perhaps they're just doing straight up call spreads. Also this 8 spread trading the OCC 32 half puts. This is one you can sit down for a few hours and really parse through all the different stuff going on out here at once.
Everybody has a different opinion, it feels like, in it, which probably means the deal's going to go through since nobody can figure out what's going on. That's kind of how I see that sometimes. Normally, everybody just doesn't know what's going on. The thing that is probably posted to go on will happen.
Yeah.
If everybody thought the same thing, it's probably not going to happen.
Who knows? Maybe that guy selling the strangle was using it to finance these OCC puts. I don't know. They weren't the exact same ratio, but they're close. Yeah, just a ton of paper going up here in good old STZ today. Like I said, over 2x ADV on the day today for STZ, doing about nearly 500,000 long deltas. So yeah, a lot of love here for STZ. This is a good one. We need to dive into it a wee bit more, but another one to keep on the old back burner until next time, because that's all the time we have right now for the odd block. So thank you for that, Andrew. You may now take off your fedora until you are called upon again. I'll keep mine on because I think it looks kind of fancy. And of course, because Alex
I just got to make sure I put my shirt on.
Yeah, well, we need that. And Alex has his jaunty Viceroy caps. I need something to go along with that. So I'll keep my fedora on. And speaking of Alex, we're going to roll right on into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, listeners, you know it, you love it. This is, of course, the portion of the show where I cede the reins over to Mr. Alex Jacobson, and he tells us what's been going on, gives us a little peek behind the iron curtain that is Options Express. So, Alex, what's been going on over there in your neck of the woods today, sir?
Thanks, Mark. I was on headsets most of the day today, so periodically I pull them off and kind of eavesdrop on the option desk and the futures desk. And two things that stood out today, two names that I haven't heard a ton of lately were General Motors and Dell. There seemed to be a lot of activity going on. Now, again, that's skewed by the fact that it's people who are using the desk versus trading online. Normally, the names you hear most are exactly what you'd expect, kind of Apple, SPX, the Spider, but GM and Dell seem to pop up a lot today. Now, obviously, Dell, there's conversation of a deal going on, but it was unusual to hear GM active today. BlackBerry comes up a lot. That's one of the names. Obviously, they have earnings about a week out, but generally with down days like this, it gets quiet and then seems to run in spurts, and that was pretty much the tone of things today. The futures guys pretty much said the same thing. It was a steady day, but nothing seemed to stand out. Let's say a little bit of traction in nat gas. but it was a relatively, I hate to use the word ordinary, but it was a relatively ordinary trading day on both of the desks.
I'm looking here at GM while you were talking, and you're right, it was a fairly active day for GM. I guess some of the love that's been trickling into Ford is starting to filter back into them now, where we saw some people picking up some flyers. Looks like 1,000 or so of the way upside March weekly 30s going up for on no open interest for 3 cents. That might have been part of a spread. I don't know. I have to look and see if I can find the other side. But yeah, a lot of weird paper going up. These are the weeklies. These expire in tomorrow. So someone took a crazy flyer on that we have 1 day to go in GM, and these things are going to pop about 2 handles or so to make this worthwhile. But a lot of interesting weird paper going on in GM. And you're right, Alex. It's kind of the at least from a market point of view of late, kind of seems to be the forgotten stepchild to Ford lately. Ford really taking up all the automotive headlines, getting a lot more paper, doing a lot more volume, and moving around a lot more than GM. But GM, it looks like it's lighting up the tape here today, so I might have to keep an eye on this for some future days. And Dell, of course, obviously a lot of news going on out there with the Michael Dell buyout, and then some maybe Blackstone jumping into the mix, and then rumors of who the potential CEO would be of Dell going forward, and a lot of stuff like that, really mixing it up over there in Dell land. So no surprise that some people are coming into play in Dell. Uncle Mike, I know you play a lot in Ford. Have you looked at all at GM lately, or been playing around out there at all, or is Ford pretty much your sole obsession in the automotive land these days?
I like Ford better. I mean, just because of I think Ford's a stronger company in general, but it's hard to say now. General Motors, I think Alex even coined the phrase on our or even talked about on our show. Government Motors is what GM is now. So I prefer Ford. So I look at them, and I think a client of mine had a small amount of shares in recently, but we exited them recently. So I would say very minimal exposure to GM, if any. There's none right now.
You can just tell me, no one's really listening, Uncle Mike. This was you, this 1,000-lot flyer of 1 day weeklies. That was you, right?
I don't trade that small.
All right, and with that, I think we will close out the Xpress Block and keep on rolling right into the Strategy Block.
The Strategy Block.
All right, and welcome to the Strategy Block. This is, of course, the portion of the show where Uncle Mike puts on his smoking jacket and sits down by a nice warm fire with a nice glass of hot cider or whatever his hot beverage of choice is, and usually, dispenses some wit and wisdom. But if you listened to our show earlier this week, you know Uncle Mike teased a rant that he's been working on. Something obviously has got his goat out there, and something is really, really working him up. I know you listeners love it when Uncle Mike gets worked up and likes to rant. So by all means, Uncle Mike, rant away, sir. The floor is yours.
All right. I want to state a fact right now, and if the market would have gone to an all-time high yesterday, this would have made it a fact, but we're going to pretend the market was at all-time highs today. I think the S&P was 4 points off its all-time high. So let's just pretend it was at all-time highs yesterday. I know the NASDAQ is far from it, but let's just pretend it was at all-time highs yesterday so I can prove my point. Never in the history of the entire stock market was there a better time to sell than yesterday, assuming you were in the S&P 500 or the Dow. Now, don't get me wrong. I'm not saying that I'm not trying to predict what the market's going to do this week or next week or that type of thing. I'm going to touch on that in a moment. But would you guys agree the market's at all-time highs? Was there ever any time in the history of the market that it's better to sell at than an all-time high?
That usually tends to follow.
Yeah, you never know what's going to happen. Now, the next day, I could be proven a liar if the market makes a new all-time high. But then the statement renews in that there's never been a better time in the history of the market to sell than when the market's at an all-time high. Now, tomorrow might be a better time. You don't know that, but there has never been a better time to sell. So with that in mind, I ran into a client, or it was actually a prospect who's actually now my newest client, and with their financial advisor, he's had them in a pretty good chunk of money in annuities. Now, I'm not against annuities. I'm going to talk about annuities here in a minute, but in this case, I'm not necessarily against the product itself. It's the attitude that I have a problem with. And he's no longer working for them anymore now, but I want to kind of go through what his rationale is. On these annuities, now there's annuities out there that have principal protection. There's annuities that have guaranteed living income benefits. I'm going to talk about those in a minute. But in this specific set of annuities where probably about 70% of the client's nest egg was located, there was no downside protection with the exception of a death benefit. And so with that, the client, if the market is a variable annuity, so let's say the market were to go way down, the protection factor that was involved was a death benefit. So let's say that you have $1 in the marketplace and the market goes to, and the market goes down and it's at 50 cents, let's say. Obviously it was much higher amounts than that. If that's the case, then the value of your money itself is 50 cents. However, you have a death benefit of $1. Now, there's step-up death benefits. There's a lot of different death benefits with which you can use on that. But my point is that unless you die, you get nothing. And what the financial advisor would come back and say to these clients was, oh, this is a great product. You have all this protection involved. And so they kept saying, well, can we get this protection if we're alive? I mean, you've done pretty well over the course of the last year. In 2011, they were showing me things on their statements to where they'd have pretty sizable six-figure swings on a monthly basis in their account. They didn't like that, and hence the reason they were talking to me. But with that in mind, the financial advisor's comeback kept saying, oh, the market always goes up throughout time, and, it's you got that protection in the annuity. No, it is not protection. It is a death benefit. Unless you are dead, you get nothing.
He counted a death benefit as a hedge. That's fantastic.
Yes. Now, with that, this is going to be a fairly long rant, so I got a lot more on this one. This one really got my goat. So with that, there's things I want to tell. There is a time when you can use a death benefit as a hedge. I did this about 10 years ago in my younger day with my grandpa. My grandpa was terminally ill. He had Alzheimer's. He couldn't talk. He had about 6 months to live tops. He was in a very high-end nursing facility, and he was a World War II veteran, so he was getting taken care of by the government. But it was actually a very nice facility. We went to see him frequently, and so he didn't need any more money, and he was going to, and I'm trying to be blunt here today. This was a very difficult, emotional time. I'm not trying to discount that, so please don't make me sound cold-blooded. I'm just using my anger to kind of illustrate a situation when there is a time to use a death benefit as a hedge. So what we did is we put pretty much all of his net worth in that annuity, and the market went up and we lucked out because we knew that it was going to be a 6-month hedge. It was basically a cheap put option. That's the time when you use annuities for a hedge for a death benefit, is if someone is terminally ill within 3 to 6 months. And there was no doubt he was not long for this world. He passed away about 3 months later, and we over-allocated to the market, and we ended up lucking out on that. So that's a situation where you do this, but these clients, they're not ill at all. So they got a lot of living left to do. So that's rant number one. Rant number two also has to do with that. When the clients came back to the advisor and said, hey, and I told them kind of what I told the audience right now. They said, okay, why don't we maybe take some money off the table right now? And so the advisor came back with, well, that's market timing. And if I knew how to market time, I'd be buying all these islands. I'd be very rich. I don't know how to market time. So I just leave money in the marketplace and rely on the marketplace to do what it's done the last 100 years. And that's make 10% all the time. No, these people are older. They've built up their nest egg. And if the market goes down 40%, then the only way they're going to get their money back is if they die. So with that in mind, what I'm doing right now with my clients, I'm buying premium. I talked about this on the show a little bit last week on one of my strategies. So in general, with premium it's not, obviously the VIX went up today, so I did this a week ago. We're at opportunities right now, folks. If you want to protect your gains, there's ways with which to hedge yourself. And I've talked about these a lot in the past, and once again, I want to go back to what I talked to. In the history of the stock market, there has never been a better time to sell than right now if you're in the S&P or the Dow. So with that in mind, folks, what I'm doing has nothing to do with market timing. I'll give you my 50% guarantee all the time on what the market's going to do, and I say that facetiously, of course. Well, actually, I take it seriously because I really don't know what the market's going to do. Here's the point to this rant. It is not about market timing. It is about risk management. If the market goes way up, you got to sell at some point. You're going to need that money at some point, folks. You have to sell at some point. Manage the risk. Don't be stupid. All right, now on to the final rant of this session. I was talking with a gentleman. We were just kind of talking about various strategies, and he was saying, well, I've made a lot of money doing this and this annuity through the last couple of years. And I'm like, well, that's good, but do you have some type of a downside protection in the annuities? Because that the actual value of the cash in the annuity itself is probably going to go down if the market goes down. And he's like, oh, well, I'm guaranteed 5%. So with that, I'm going to give everyone a quick bit of education on what annuities are about. It's going to be a quick 2-minute lesson, but I want you guys to know what this is about because there's a lot of predatory annuity salesmen out there, and I want you to understand the facts about how they work. First type of an annuity, it's a fixed annuity. An annuity is technically a life insurance contract, but it's designed to act as something that you put a larger chunk of money into. With an annuity, in a fixed annuity, you put money into it. The insurance company will guarantee you 1%, 2%, typically around the area of what a CD is, maybe a little bit better than a CD. So on a fixed annuity, a very similar thing, in my opinion, is a CD, certificate of deposit. The only difference is that you're banking it on the guarantee of the insurance company as opposed to FDIC insurance. You'll get a little bit higher interest rate on it, but you don't get the FDIC insurance to go with it. You get the insurance, the full faith and credit of that insurance company. Folks, if they're used right, I have no problem with fixed annuities whatsoever. I have no issue with them at all. They just need to be used properly, as that's the section of your money that's designed to look like a CD in one way, shape, or form. Don't plan on getting rich on them, but they are what they are. Now, the next type of an annuity that exists, an indexed annuity. I have no problem with indexed annuities. I have no problem with any annuities for that matter, but the indexed annuity. An indexed annuity is kind of what I've based my entire career on, quite frankly. Indexed annuities, they'll base the rate of return on the stock market, typically. There is one indexed annuity out there that I know of that bases it on some commodity thing, but for the most part, they base it on the return of the stock market. The insurance company will guarantee you a 1% rate of return, even if the market goes to zero, but they'll cap off the upside usually at around 3 to 5%, something like that. Depends on the company. You have to keep your money in that annuity, usually for anywhere between 3 to 10 years, depending on the annuity. And it is what it is. You have your downside protection. It's a living benefit, and it can work. Now, one of the reasons with which I became so into collars is I saw how popular those annuity products were, and I thought, I can create something with more variety, and I can create something, in my opinion, better by doing collars. But with that in mind, I don't have a problem with the indexed annuity if it's done in the right context. I've sold indexed annuities in my life, and I will continue to do so if it's in the right context. I view an indexed annuity as kind of like the tool that you use maybe once a year. And I think I've maybe sold one indexed annuity in the last 3 years, but it's like a specific tool for a specific job. For example, I had a client that had a very high cost basis built into one of his other annuities that stunk. And so I put him into this annuity, and that's the one annuity that I did over the course of the last 3 years. Not a bad product by any means, but we needed to protect a very large chunk of cost basis that was involved with it, and we didn't want to take on the tax of taking it out. Now, the variable annuity. Variable annuities are something to where you can invest in a variety of mutual funds within an annuity. So let's say you buy the MetLife variable annuity, the Prudential variable annuity, the Jackson Life variable annuity. What it is it works to where you can invest in various mutual fund sub-accounts within the annuity itself. and you can invest in the PIMCO Total Return Bond Fund. You can invest in the Fidelity Magellan Fund, whatever the funds are within the annuity. It's a various sub-accounts. And the advantage of all these annuities is that you get tax deferral on it. If it's outside of an IRA, you put money into the annuity, whether it's fixed, indexed, or variable, and you don't pay taxes until you take money out of it. Now, you're taxed at ordinary income, but there's something to be said for that, and there's certain times when that strategy makes sense. So let's say that you want to put all your money into the Fidelity Magellan Fund and then get out of all of it, put into bonds or cash or whatever. You can do that within an annuity, and there's no tax consequence to it. So it's kind of an interesting concept. It can make sense. But with that, let's kind of expand on how these variable annuities are being sold these days. And this is where I think a lot of the predatory annuity salesmen are coming about. You have various protection aspects that exist in the variable annuity. Protection that will be marketed as, the insurance company will guarantee a 5% rate of return or the rate of return of the market, whichever is greater. Now, who on earth would possibly turn that down? I know I sure wouldn't if that was the truth. That's how it's marketed, and that's what really makes me sick, quite frankly. The guy that I talked to the other day, he said that. He said, well, I'm guaranteed 5% on my annuity. No, you're not. Not the way you think you are. Here's how the 5% works typically when they'll guarantee you a percentage. Now, different contracts have different rules on it, but typically how it works is, let's say you put $100,000 into an annuity. You'll get the up. Let's say the market goes way up. Well, great. That's fine. Everybody's happy. Market goes down. Well, after 10 years, typically, a lot of times, and these are just some of the ones with which I've looked at, about 3 or 4 years ago, Kavanaugh and I were actually considering doing a marketing campaign saying, take the annuity challenge, we'll beat the guarantees with options, but we just decided not to. But nonetheless, we did spend some time researching it in terms of how these things actually worked. But with that, this 5% guarantee, what it's based upon is an annuitized amount. One thing that you can do with an annuity, whether it's fixed, indexed, or variable, you can do something called annuitizing it. And when you annuitize it, you're telling the insurance company, I want to get X amount of income every month for the rest of my life. And this is kind of the opposite of life insurance. When you buy life insurance, if you die right away, you win because the insurance company pays up right away. With the annuity, the insurance company will pay you for as long as you live. So you want to live for, if you're buying life insurance, it's beneficial to you financially to die the next day. If you are buying an annuity, it's beneficial for you to live forever because the annuity company has to pay you forever. Now, the annuitized amount, what they'll do is they'll say, okay, you have $100,000, and let's say that 6% is the amount that will guarantee you over 10 years. What that comes out to is that it's an annuitized amount, meaning that you can annuitize the annuity as if you had $179,000. I think that's the number it comes out to at 6%. I'm not sure off the top of my head, but I think that's what I saw in some literature recently. What it comes out to, you can get a pool of income for the rest of your life as if you had $176,000 or $179,000 in your account and actually made that money. So if you're thinking that you're going to get that money, you're not. Now, let's expand that even further. In an annuity, let's say that you decide you want to annuitize. You want to make yourself as old as possible. If you're buying life insurance, you want to be as young as you can because it's the cheaper rate because you're theoretically going to live longer. In an annuity, you want to be as old as possible so your monthly payouts are higher because you're going to be closer to death and you'll get a more beneficial rate. A lot of times in the fine print of those contracts, there's a clause in there that says you can annuitize at 5%, but we have the mortality factor that exists in here that you're automatically going to have to deduct 14 years from your life. So you're really not even getting that. Now, I need to take a breath right now. So if you're thinking that you're guaranteed a percentage amount or the upside of the market, well, kind of. Now, there are annuities out there on the variable side that'll have a principal guarantee. Those are fine. I have no problem with them because oftentimes what the insurance company will say is you have to hold them for 5 years, 10 years, whatever. And those do exist, and I think that they're straightforward, and I don't even have a problem with the income-based annuities so long as you know what you're getting into. But a lot of times on the annuities, just this one specific client that I had in there who didn't even pay for any of these living benefits, when you add up the M&E charges and the fund charges within the mutual fund itself within the annuity, This was just without even any of those living benefits that I talked about. This is just with the death benefit alone. It came out to about 2.75% annually. Now, if you add some of those guarantees of the 5% or principal guarantees, a lot of times it comes out to even an additional 1%. If you're investing in some type of exotic international growth fund or emerging market funds, a lot of times the fund fees are going to be higher than that. So with that, the final point to this that I want to make is that if you're going to go the annuity route because you want to not think about it and you want to just know, oh, well, I have this just in case I have the annuity protecting me. Folks, they're selling it. There's people out there that are selling it as a put option when it is not a put option. And that is my rant for today.
Wow, that was epic. Epic in every respect, sir. Interesting stuff. Annuities are a great topic of conversation. I think you hit on a lot of the salient points already. Maybe down the road we could revisit this discussion because you're right. There are so many, let's say, less than reputable financial advisors or perhaps less than educated financial advisors who go out there and marketing these annuities as the panacea to all the ills of the markets. And what drives me crazy is that we'll hear people contacting us at Insider or through our shows and saying, I don't want to use options. I'm scared of options. I'm scared of derivatives, but I'm loaded up with annuities because those are safe. And they have no concept of what actually goes into those annuities or how they're constructed or how frequently options are actually used in these annuities to generate a hedge or generate income or whatever the case may be. So they have exposure to options and derivatives even when they may not think that they do. So there's a lot of things I think we could dive into in the annuities discussion, but we'll save that for another day because we're running low on time. But a great epic rant as usual, Uncle Mike. And now we'll roll on into our final segment, Around the Block.
Around the Block.
All right, and those car horns mean that it is time for Around the Block. This is, of course, the portion of the show where we tell you what we're watching for the next few days, rolling on into the weekend. And I know Mr. Andrew has one thing on his mind and one thing only. It's not the VIX. It's not the SPX. It's nothing like that. It is indeed Cypress. Nothing but Cypress and those gangsters. Am I correct? Am I correct, sir?
I just think that the Cypress gangsters make some short-term day trading more interesting. By Monday, you know what'll happen. And then as Mike says, you'll probably be back to going and buying some puts on your long-term equity positions, or at least selling a couple of calls, which I've been doing, not getting much money for them, but we're getting a couple more bucks today for them. But yeah, I think that's been messing the reality is it's really only moving the VIX, up one full point, 1.5 points tops. It definitely feels like a market that is getting a little more used to these shocks and trying to put whatever they are in the proper place. So whether we go up anymore or down anymore, who knows? But it feels like it's going to do it, and it's feeling like it's wanting to do it in a less volatile type manner, and that seems to be the trend we've had most of this year, is that the volatility has come in quite a bit, and it looks like that could help bring, hopefully, maybe the individual investor back into the market slowly but surely. But I'm sure they will be late to the party to some degree. But I am looking at the Cypress thing and actually seeing how it plays out a little bit. But I guess we know Monday, unless, of course, they kick the can down for another 2 weeks, and then we'll know 2 weeks from now, and on and on and on. And then we will probably see the volatility start to expand if they keep pushing those time frames out, because the underlying economic data feels like it's getting better.
They are big fans of kicking the can these days, so I wouldn't be surprised to see another kick. Of course, if minis aren't enough to bring the retail back to the market, then really, what hope is there left for us, sir, in this marketplace? Maybe next week we'll have to do a little mini roundup. We already talked about the questions that go into the minis and how they're constructed, but maybe a mini volume roundup might be interesting. Alex, see what you guys are seeing over there at OX and how well minis are lighting up the tape, or perhaps not. It might be interesting to dive into a little bit. I know some exchanges are already coming out and saying they're a modest success, so they're qualifying a lot of their pre-launch hype. We'll see if that carries over into next week. Speaking of next week and the rest of this week, what are you watching over there? I know you got what's the word? I almost said minis, Uncle Mike. Oh, yeah, annuities. I know you've got annuities on the mind, Uncle Mike, but aside from that, what are you watching for the rest of this week into the weekend?
Well, nothing specific. I mean, obviously Cypress and I think they're all insane in the brain, quite frankly. Okay, nobody caught my '90s reference. I guess I got to stick to the '80s. But you guys didn't catch that?
I caught it. It just it didn't really do anything for me.
Okay, I understand.
It wasn't near the level of the rant.
Got it.
I mean, the rant was kind of awesome.
Yeah, we're also coming off the highs of the rant.
It just didn't. It really didn't. It didn't throw any wind through my skirt there. Speaking of skirts.
My headset caught fire during the rant, so that's how terrific of a rant it was.
Did you lose the jaunty cap?
No, that's what the noise was, Mark. That was somebody putting the fire out in Alex's head. There was a fire alarm pulled at OX, and Alex caught fire.
I'm guessing, Alex, in your long career, you've had one or two lengthy discussions about annuities.
Well, yeah, on many occasions. I will tell you the first flex trade in the SPX on the CBOE was an insurance company that had an indexed annuity and needed customization for their dates and their strikes to match the policy. And a lot of the business in Flex SPX has been related to the hedging of indexed annuities. So, to your point, a lot of people who always are reluctant to transact in the O word. The point I was making was a lot of the early transactions in the SPX Flex were insurance companies and actually banks that had done index CDs and indexed annuities and were hedging using the SPX. And it's back to your point, Mark, about, there are people who tell you they don't want to trade options, they're risky, they don't understand them, and then they'll show you a product that has more options embedded in it than even we could design. So it's interesting because a ton of that stuff used to go into the annuity contracts.
How much would the mind of that proverbial grandmother from Iowa be blown if you told her that your annuity is being hedged with these flex contracts right now? It would literally blow her mind. So perhaps it's better we don't share that information with them. But I'd imagine a lot of the flex stuff is tied to that. That's a perfect reason to have the flex and a perfect use case for it, to hedge these obscure, weird, dated contracts that they have in these annuities. Uncle Mike, we kind of derailed you there. Anything else you're watching before the rest of this week into next week?
The numbers in general, I mean, obviously we're close to the all-time highs right now in the markets, and then gold and silver are starting to run again. So just the numbers in general, the numbers in Cypress.
And Alex, aside from annuities, anything else catching your eye for the rest of this week?
As we talked about earlier, there's something's going on in the interest rate market, and I'm not really sure what it is, and I'm not sure if it's the mortgage news, but I think it will bode badly if the 10-year can't hold the 2% yield for long. Other than that, just what everything else, just the stuff that's come by from everyone. Cypress is a non-event, although I'm sure there's 4 guys from the Russian mafia sitting with a road atlas now trying to figure out how far it is from New York to Maine. But that's kind of a separate issue. But yeah, I mean, new highs, quiet markets, a little bit going on in energy. I think as with all of us, we're concerned about something that might derail this because it's just kind of our natural cynicism. But not a lot of news, not a lot of earnings, quiet markets.
Quiet markets indeed. And I think with that note, we shall wrap up this annuity-centric version or episode of the Option Block. I, of course, want to thank all of my cohorts, my partners in crime on the All-Star panel for joining me today. And really quickly, each of you, why don't you let our listeners know what's going on in your neck of the woods that may interest them. Starting off with you, Uncle Mike, what's rolling in on the old webinar tray next week?
Well, we have a new product out, a special new annuity that pays 6%. No, just kidding.
I love it. I want it right now.
We have a trading psychologist that's going to be making his debut on TNT on Thursday night, the night before Good Friday. And he will be on the show on Monday for an interview. So we are excited.
Sounds good. We all can use a little bit of psychological analysis, I think, on this show. So he might have his hands full when he comes on Monday. All right, and Mr. Andrew, what are you watching over there in the land of the pit? Or I'm sorry, what is coming up in the land of the pit?
Oh, you mean an actual event?
Yes, an actual event, sir.
We have on Saturday, April 20th, our big event with the CBOE and the Options Institute on trading the VIX. Please go on to our website. That would be optionpit.com/events, and take a look at it. Sign up. For anybody that is an Option Pit client, I believe there is some sort of bargaining to be had with Mark on this particular thing. But it's a great way to learn how to use the VIX and also some of the funkier exchange traded products that go along with it, and to understand how this volatility market works. So I think it's a good opportunity to learn a lot in a relatively short period of time. And that is April 20th on a Saturday. Starts at 9 a.m. Central Time. And, obviously we look forward to seeing you there.
All right, be there or be square. I like those events at the CBO. I may have one to discuss a little bit later. But first, Mr. Alex, what is coming up in the land of OX education?
A live event on Saturday, March 23rd at the in San Francisco at the Westin by the airport. I think I mistakenly said the Marriott on Monday, but all-day event, and those are simulcasts. So if you can't make it to the event, you can come to the site, optionsexpress.com, and you can view the event from the comfort of your home. Pulled a couple webinars off the list for next week, so I'll just showcase a couple of them. On the 25th at 1 o'clock Chicago, we're doing Bollinger Bands. On the 26th at 3:30 Chicago, we're doing Meet the Idea Hub, a topic near and dear to my heart. And on the 28th, we're doing the first full mini options webinar, noon Chicago, and a lot of that stuff will be repeated. But you can come to the site and you can see that there's a webinar literally almost every day. Some days there are 2 webinars. They're all free. You don't have to be a customer. You can just come to the site, click on the landing page, go to the education tab, and you'll see lots and lots of free education.
All right. Thank you for that, Alex. And since we're all talking about events and webinars, I would be remiss if I did not remind our listeners. Many of you have already registered for our upcoming unusual activity forum. If you have not, then by all means, surf on over to theoptionsinsider.com. It will be held at the old CBOE, a popular place for these types of things. We're going to even get you down to the trading floor before the bell rings. You could see all of your favorite options in action, trading in their natural habitats. Apple, Google, VIX, SPX, all that fun stuff. theoptionsinsider.com/events. You can find out all that information. We've added a number of great new speakers to our lineup, including a bunch of really cool attendee bonuses, I suppose you can call them, attendee gifts. So if you sign up for our early bird rate there, you'll get a lot of fun stuff headed your way, in addition to all the expert sessions and the floor tour and all that fun stuff. So check it out, theoptionsinsider.com/events. If you're going to be in Chicago in May, particularly May 15th, then we'd love to see you there. theoptionsinsider.com/events. Check it out. And of course, before we go, all of us here on the All-Star panel want to thank all of you in the listening audience for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.